All right, everybody, welcome to another edition of Market Talks with Dr. Stoxx. It is the 19th of November. We are 2 weeks on from the election. And during the election, we had a nice post-election rally, way up. Post-election crash, way down. And now we're starting to pick up the pieces here on the back end. As we move into a very good seasonal period for the market, as we head into latter part of November, early part of December, we start to get some of the January effect kicking in, Santa Claus rally kicking in. Should be a pretty good time for the market. Market seems pretty happy right now. It's not without its problems. Like World War III almost started overnight, but that seems to have died down. And we've got still a lot of political uncertainty on the horizon, but market seems to be mostly okay with all of that. And there are some really nice sectors, some nice moves, some nice breakouts that we're seeing in some of the key sectors. We'll look at those here in just a minute. Okay, so where did I want to start again? Yeah, I want to take a quick look over here at a software or a web browser service that I don't use that often, but I can recommend, called TrendSpider.com. Relatively inexpensive, $50 I think a month. And it gives you access to charting, screening, and backtesting tools, all of which are really nicely done. And it's got lots of bells and whistles. The only complaint I have about TrendSpider is that I feel like it's trying to do a little too much. It gets a little bogged down with all the details, and I need to have a user-friendly kind of charting package. And it's not quite that. It does. There is a learning curve to get all the features under your belt. That said, let me show you two quick features that I really like a lot. So if you go over here to click on Market Scanner, right? If you get rid of that, do I want to save changes? No. If we go to, let's just forget that. Let's just go to Market Scanner. We're already in Market Scanner. There are two scans I wanted to show you. One is that I like a lot is called Recent Power Gap. And this is a scan that will find strong uptrending stocks that have not only are they uptrending, but they also gapped up to 52-week highs sometime in the last 2 weeks. And they may be above that, they may be below it, but that's all that the scan is looking for. Uptrend with a big gap up to 52-week highs. And it has to hit the 52-week highs on a gap. So it's not that it rallies up there, it gaps up overnight. And those big gaps like that, they can come on earnings, upgrades, phase 2 trial for a biotech, those kinds of things. And very often they mark a line in the sand where the price doesn't go down below that because the market is giving that stock, that company, a new valuation. We've got some really nice charts on here. When we run that scan, which I did just a bit ago, you get a nice set of stocks. COHR, here's your gap. This one did come back down into the 34 bands to sort of fill in that gap and then some, and then a big rally up today. Net is a software play. Here's your gap up to 52-week highs, pull back into the 34 bands. That's actually not a bad little setup right there. We are long VST. Here's your gap up right here and a nice sideways consolidation. Today back up to 52-week highs. APO is in that asset management group. It's one of the best. Here's your big gap up. Nice sideways consolidation, breakout move today. HWM is a defense aerospace play. Here's your gap up. Nice sideways consolidation. So we're seeing here several ways in which these gap ups can move forward, and one is a little better than the other. So sometimes they gap up and then they trail back down into the gap to close it. And if they keep going further south, then you don't want to bother with that. That's a no-go zone. If it comes back into the gap, especially in kind of a soft sort of way, doesn't just fall overnight, but comes down over a couple of weeks, hits a level of support and rallies back up again, that's a buy signal. A stronger buy signal, however, is it gaps up and then it goes sideways for 5, 6, 7, 8, 9, 10 trading sessions, forms a high, tight base. Then it gives you the breakout. Now, getting in on that high tight base is a little tricky, right? You can't just buy it on the fifth day because you might have 3 or 4 weeks of sideways action and you're kind of stuck in there and it's not going anywhere, not making a profit. You have to figure out the most likely level at which it's going to break out. And that's kind of a tricky thing. I have a couple of tools that I use to do that sort of thing. And your second best bet, if you don't have access to those kinds of tools, is just to buy it down at the range support. So, for example, on HWM, you can see range support is right around 111.50, and current price up here at the top of the range is 115.40. So you don't buy it at 115.40, you buy it at 111.50 when it dips down there, and it might dip down there in a couple of days. It might not at all. Today might be, in fact, the breakout day. So very good set of stocks here. These are strong companies. I should say strong charts, not necessarily strong companies, but they are gapping up usually for a very good reason. Here's another one that we're in, GMed, sideways gap, right? So gap up, sideways for several days. We got in this morning, and it has rallied up nicely, right up to the top of the range. Looks pretty good, like we've got a breakout potential here up to new 52-week highs. So that's one thing I wanted to show you in the trading room. And we're coming to you live today from the Dr. Stoxx trading room. And if you're interested in joining us, you go to drstoxx.com, drstoxx.com. Click on the live trading button, and you're good to go. What was I saying? Oh, yeah. So we're using this screen as one of the tools, one of our many tools, to find some really nice looking chart setups. We have to do a little more due diligence, right? You can't just buy these because they're on the list. You have to dig down into some of the fundamentals. You have to take a look at the chart. You drill down to the 1 hour chart, the 2 hour chart. You look at analysts. You look at momentum indicators and volume indicators, and you make your decisions based on that. The other one I wanted to show you is, let's see, where is it now? It's this 10% pullback. Oh, this is click yes. 10% pullback after a 20% rally. So this is interesting. We run the scan and we'll let it populate. These are stocks that have gone up 20% from I don't know where, but in the last, in the last couple of months, it has rallied 20. And from that peak of at least 20%, it has pulled back at least 10%. So if you know anything about Fibonacci retracements, then that would be a 0.50 fib retrace, which is typically where you see price hold, turn around, and go back up again. So this gives me a list of stocks. Now, these happen to be a little bit less of a robust list, right? You're seeing some penny stocks on here. You're seeing quite a few stocks that are under $10 a share. I don't do a whole lot with those lower price stocks. I have a letter that aims at only penny stocks, and I have a letter that includes a portfolio of stocks priced under $10. So I'm not opposed to trading lower price stocks. But for the purposes of our working in the room together, we usually like to trade stocks with a little bit larger market cap and a little bit higher price. We do have a few on here, for example, EWTX, right? So here's your 20% rally. Here's your 10% pullback. And I don't know if this would be ready to go, but it is flagging a potential reversal bar right there, just underneath the bands, not quite where you want to see it. You want to see it in the bands or on top of the bands. Let's look at another one, GOCO. Here's your 20% rally. Here's like an ABC pullback into the bands. That's more what I'm talking about. Reversal bar today. So that could be a potential upside. And let's look at one more. LEU. This is an energy play. So this one is not good to go. It did have the 20% rally, did have the 10% pullback, but it's still falling. You don't want to buy something that's still red, where you get in on a green bar. All right, just wanted to show you those two tools real quick. Now, I am a partner with Investors Business Daily, and one of their, I'll show you this real quick. One of their services is called the Leaderboard, one of my favorite services, and I know the the fellow that is the manager of this, and he is that's not what I want. Oh, I need to log in. Hold on, let me go over to hold on here. Okay, well, I better not log in because I don't want to give away my login data. But let's just say that there is this service here, Leaderboard, very, very good, strong, robust service, gives you really the market leaders that are doing well in all kinds of market conditions, and they generally have a very good knack of finding the leaders in a variety of sectors that are moving the way higher. So today, they came out and they added 2 stocks, which happen to be both in the same sector. They added TradeWeb, which is an asset management firm, and they added it on this nice little breakout here, right? You've got a rounded bottom, consolidation base, breakout move today, very good volume, excellent fundamental growth, right? It's a little bit on the pricey side, but the growth is amazing. The margins are huge, right? It's a very well-managed company. And then they also added OWL, O-W-L, same asset management firm. Here you've got sort of a triangular bottom, consolidation top. You can draw a line right across the tops of those pivot highs there, and then you have the breakout move today. And they added OWL, they added TW, and I'm thinking, you know what? Both of those stocks have already moved. They've already broken out. They're showing big green sticks, and I have a general rule that says you don't buy a big green stick. When that happens, when you buy a big green stick, you more times than not can get a better price the next day because it does come back in and gives a little bit of it back and consolidates a bit. So I didn't want to buy either one of those, although I like them both and I like the breakout, and they're probably both going to just go really nicely higher. This is what I did. I clicked on asset management as the sector, 113 stocks in there. That's too many, and most of these I'm not interested in anyway. Scroll down to the screening tool. I set the average volume over 1 million, and then the average price or the current price over 20. That whittled it down to 18. I'm sorry, I don't think it was 1 million. I think it was 500,000 is what I did. Yeah, 26. And then I went through all of these charts one by one, started to look at the technical patterns, the growth, the PE ratios. I took them also over to MarketSurge, which is another IBD tool that I like to use. And I typed these in one by one and discovered that some of them have much better fundamental metrics than others. So you look over here at your fundamental metrics, your EPS rating, your SMR, that stands for sales, margins, and return on equity. Is it being accumulated or distributed? Your comp rating, which is kind of the overall score, taking all kinds of things into account. The timeliness rating, that is your technical rating, technical strength. And I compared the short list I had 7 or 8 of them, and came up with a single one that satisfied all my requirements. It was KKR. And so we went long KKR just a little bit ago. Strong chart, obviously, perfect fundamental metrics. It's an A for timeliness, 99 comp, A for accumulation, A for SMR, 92 EPS. This is by and large the strongest of that whole group. 113 stocks. This is your leader right here, KKR. Just to confirm that, and because I did have about 2 or 3 that were really up there with the IBD metrics, to find the best one, I went over to TipRanks and I typed in what was one of the ones that I kind of liked, State Street. So let's just say I typed in State Street. You want to look at what is the overall analyst rating, and you scroll down and you're looking for 5-star analysts. There are a few in here that have some buys, but overall not looking real good, right? It is a hold with 14 ratings. But then you look at KKR, And there it is, a strong buy on 12 ratings. So you also can see their EPS is in very strong growth phase. So that's how we used several tools there to figure out from a asset class, from a sector in the market, two of which were highlighted by Investors Business Daily as breakout candidates, strong charts, strong companies in the same space. And I thought there must be a third out there. There must be a third that hasn't yet broken out, but has the potential to break out because it's got all the same fundamental strength, all the same growth. And typically these things do move together as a group. So that's where we went long KKR. What does KKR stand for? KKR. Probably the founder's initials. All right. Okay, so let's dig down into some charts, and we'll see. Here's KKR. There it is itself. Here's your gap up, and that was not on earnings. That was on the election last week. Clearly, people trading this stock love the fact that the election came out in a certain way, and I think we all can breathe a sigh of relief that it came out smoothly. We're not still bogged down in the courts. We're not still uncertain about who the winner is. There aren't any protests in the streets, at least not yet. So all of that we can be thankful for, and we're now kind of moving on to this next phase of American history, and the market is just taking it in stride. So I like this. The big gap up, right? Big green stick. You don't buy the big green stick because the next day you can get a better price generally. And instead of falling down and closing that gap, which some of these do when they do gap up like that for whatever reason, this one kept going higher. I mean, that is about as strong as it gets. So here's your consolidation box right there. And frankly, anything in that box is a buy. We just bought it today because OWL was breaking out, TW was breaking out. The market has been moving from red to green all day. And ideally, you'd want to buy it down here at the lower end of the range. We're in. We put our stop below that, of course. So if it does go down to that lower end of the range, we're still in the trade. It looks to me like a 156 is probably going to be the first hurdle, and then it's going to get up to the upper 160s, 170 or so. So that's the thought process that went into that trade. Just to let you know that there are several tools that you can use to whittle down a short list of stocks to the 2 or 3 or 4 best candidates, and then you can take it to something like TipRanks there to figure out the very best candidate of that group. All right, let's look at some index charts here. So we had a big, what do you want to call it, a downdraft this morning. So overnight, somewhere overnight or yesterday afternoon, not exactly sure when it happened, but Ukraine was given the green light by the United States to lob some missiles over into Russia. And everybody and their mother thought this was going to tip off World War III. Russia retaliating, and then Ukraine being kind of a NATO nation, we'd have to jump in. And of course, we're already financially well invested in Ukraine, so probably wouldn't be able to just stand by if Russia were really, about to nuke the country. And an hour passed, and a couple hours passed, and a few more hours passed, and there was just no retaliation, no move out of Moscow. And any news that was coming out was just more like it's a non-event. It's another one of these non-events, because this whole thing has been threatened for months and months now, and finally happened, and then it turns out to be a nothing burger, which is exactly the way we all want it, because we don't want people getting nuked. We don't want anybody getting nuked. It certainly wouldn't be good for the market either. So market got really scared, went way, way, way down, off right into the bell. The bell rang, started to stabilize a little bit, started to rally up a little bit, and then every 15, 20 minutes that passed without a nuclear explosion, the market just kept getting higher and higher and higher, and here we are right up against the highs of the day. And we've gone, for the most part, most sectors have gone red to green. Most everything was red this morning. Now most everything is green. We do have a few weak sectors. China not doing very well today. The Dow Jones Industrials a little bit on the weaker side today. What else? Energy is not so good. Banks are feeling it a little bit. Some of the materials sectors. So there's still some sectors out there that are a little bit skittish, but for the most part, especially with the tech stocks, which haven't been real good, a lot of the semiconductors have not been real good, they have started to bounce back. So that's good. You know what this does? That big drawdown, if you can see it right there, that big tail, that is a flush out move. That is very bullish. When the market opens up high, travels down south throughout the day, hits some sort of threshold, and I'm not sure what that threshold would be here. I don't see any clear indication of a price support. But it hit a certain threshold, and then all of a sudden, all the algorithm trading, high-frequency trading programs are program bullish, and it just starts to rise back up again. And all those shorts that were panicking and selling everything and putting on their puts and putting on their VIX plays, they have to do something because they're getting squeezed hard. Now we're back above price support, former resistance, now support. We're back above the 21-period moving average. We're still back at the midline of the LRC, the linear regression channel. Everything is flowing higher. We're back to good old-fashioned bull market action. Beautiful. It's beautiful to see. So that's the S&P 500. The NASDAQ did pretty much the same thing. Hasn't quite traveled as far above resistance because it traveled a little further below resistance than the S&P did. The NASDAQ has been under some pressure because of the semiconductor space, which is such a leading sector in the NASDAQ 100, and it just hasn't. It's been pricing in some negative stuff out of China. But I like the fact that the flush out move in the NASDAQ almost tagged the 50-period moving average and rallied back up. That is a very clear sign that the 50-period moving average is going to act as support. Anywhere near it, it's going to bounce right back up again. Kudos to anybody that bought that opening dip, because when you're on the threshold of World War III, the last thing you want to do is buy a whole bunch of stocks. Some people did, I'm sure, but I wasn't one of them. So the Russell 2000, this is a nice-looking move. I was talking about this yesterday during our live chat, or the day before last week, how this is a nice 4-bar pullback, very orderly. By orderly, I mean the open is near the close of the previous day. The next open is near the close of the previous day. The next open is near the close of the just very orderly. Not a whole lot of overlap there in those bars. Back down to the 21-period moving average. Good things happen above the 21. Not so good things happen below the 21. We held it yesterday with a doji and then reversed on that flush out move back up again, reversed right back up to the highs of the day, almost taking out yesterday's highs. That would be good if we did. But this is a good classic pullback reversal move. You've got the oversold stochastics down here at the bottom. Not seeing a whole lot of bullish volume coming in just yet, but the funny thing about indexes is that a lot of that volume comes in after hours off the exchange, so kind of hard to tell what the total will be. Gold is up nicely today, a bit off its highs, but it's bouncing back after a deep cut low outside of the LRC, a full 4 percentage points below the 50-period moving average, which is up here. By the time you got down here, you were at least 4, maybe 5% below the moving average. 2% on a pullback below the 50 is typically the place where you see gold hold and then reverse back higher. We got twice that just the last couple of days. And why is that? I don't know. I mean, the market's not worried about recession. It's not worried about inflation. So I don't know what was going on with gold other than the dollar skyrocketing. Dollar's now getting a little bit soft. So it would be nice to see the dollar come down, bonds go up, gold go up. That would just give us a healthier macro for stocks. All right. Let's look at the mags first, and then I'll go over to the my greens list. Okay, so I haven't really been focused this week or last week on holding too many of the mags. We are in Tesla, and I think everybody and their grandmother should be in Tesla for the next 10 years. Seriously, I think that's probably going to be, of all the major blue chip techie type stocks, I know it's not a tech stock specifically, but it is becoming one, and it will be one going forward. It's probably going to be a tech / energy / retail play, and you just want to be in Tesla. Just take my word for it. You want to be in Tesla. You want to be in Bitcoin, and then the rest is on a day-to-day basis. Amazon, I'm not that keen on Amazon. The fact that it has not held up like we've seen some of these other charts holding up nicely, and it has the gap down on the new 52-week highs. A gap down on a 52-week high is often a trend killer. I have a whole trading system that looks just for that, right? Up, 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 and then something bad happens and it gaps back down and it doesn't close that gap for a couple of days. That's a short signal, and that's kind of where we're at with Amazon. So it's a no-go zone for me. Adobe, keep thinking this is going to have its moment. It's in a downtrend. It's in a contraction phase, not an expansion phase. I'm not sure why, because a lot of the software names are doing pretty well up near 52-week highs. I don't know what's wrong with this one. Don't have to know what's wrong with this one. The chart tells me everything I know, everything I need to know. It was a short candidate. We were talking about it last week. A short candidate up here, downtrending LRC in the blue zone. Buy the pink in an uptrend, sell the blue in a downtrend. You can make a good living trading stocks. Now, that's a short right there. Netflix, up, 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 up. Gap down, up, up. Crazy strength going on here. Now, there are some things, the big fight with Tyson that came out, and there was something else I forget, and it had a lot of, I don't know. I'm not exactly sure why the market loves it so much, but let's just say new content, and I don't know. It's doing something in AI that I don't understand, but the market loves it. Now is not the time to buy it. However, you are well beyond the 2.0 standard deviation, away from the midline of the uptrend. That is a place that usually starts to cool off. You could be in dead money for a couple of weeks. You could be in a pullback for a couple of weeks. You don't want to do either one of those. You don't want to be a bag holder up here at the highs. It is not a short, however, and in fact, if I were long and I had some profits on the table, I would be trimming a little bit, but I'd also be rolling up my stop prices. The time to buy it is right in here, right? So let's look at that, because this is the kind of setup that you want to spy when you're doing your chart work, right? Uptrend, uptrend, uptrend. Every dip is being bought. Sideways consolidation for about 2 weeks. You're starting to see some good volume accumulation down inside of that consolidation. And then you get this little breakout bar, not necessarily on big volume, but it is a price breakout, and it was all up from there. The time to buy it is in this little section right here, or on the breakout day, or even the next day after that, the confirmation day. And it's not, you don't buy it up here. I know it's, tempting to chase momentum, and everybody and their brother at the watering hole at the office is talking about how they're making a fortune in Netflix, and you're thinking, man, I want to be a part of that. No, the time to be a part of that was back here in late October, not now. It's a hold, though. Don't short that guy. So Microsoft has just been dead money, not a good chart. Everything is going sideways in terms of price, downhill in terms of the linear regression. So it's in a downtrend. Look how the three moving averages are all bunched up here. That's just total deadness, total price deadness. There's no trending action there at all. One of the things that I teach all my private coaching clients, that I teach the members of the live room, we trade the trend. We trade the trend. There are some exceptions to that. Sometimes you can find a downtrend that's beginning to flatten out. It gives you a nice pattern. It gives you some volume. It breaks out above a recent range high. Yeah, I'm not opposed to anybody buying that. But for the most part, 90% of your trades should be longs in an uptrend, shorts in a downtrend. And this is really it's neither. It's not really an uptrend or downtrend at all. Apple, so all those tech stocks that were so excited on the election went way up to 52-week highs. Apple did nothing, absolutely nothing. It looks like Microsoft here, only it's a little bit stronger of a chart because we had that previous uptrend and we're kind of seeing the residual of that in the LRC. But man, it's just going nowhere. You don't want stocks that are going nowhere. You don't want to be in a stock for 2 weeks and just have it sit there and not give you some profit. So, cutting your losses short, huge part of trading. Getting in at the right time, huge part of trading. But for the most part, you don't want to be in stocks that don't go anywhere because then you're not making money, to put it simply. All right. CRM is, so this actually is a nice one. We've got big up on the election to 52-week highs, pull back into former resistance, now support, reversal bar today. That's actually a nice-looking buy setup. You've got the oversold stochastics. So let's call CRM a buy. In fact, I've got it on my greens list already. Facebook is down into the pink zone of an uptrending LRC. As I said, you can make a good living buying that kind of a setup. It is, however, in a short-term downtrend, and I would kind of like to see a little more robust bullishness here. You look down at the volume balance, it's mostly selling on the way down. We're not seeing yet a lot of accumulation of those shares, so let's wait on that one. Avgo, really liked this one a lot when it was basing up in here and hit the all-time high list, like 184, 185, and then it was just all downhill from there. That's post-election pullback, and we're still okay. It's not like this is a no-go zone, but the fact that we could not break out to new all-time highs and broke the short-term uptrend, we've got a 21 over 50 cross. That's not good either. It's just there are better setups out there. Let's not worry about it. So Tesla, here's your. So we're well under all-time highs. That's up above 400 something. This is on the way, right? We had this big up on election, a little bit of a 3-bar pullback, and we're right back up again. We're long TSLL with this. Got a nice big cushion on it because we bought down on this day here, and yeah, it's really 350 is going to go, and then we're a 400 round number, and I don't know where is the all-time high? It's way back there, isn't it? Yeah, way back there. Like 410 or so. So 400, 410 is kind of the target for this. It's got to get through 350 first. 350, 360, probably gets stuck there for a little while. But it's got political tailwinds. It's got Optimus Prime, which is potentially a $200 trillion market. That's what somebody said today. And you've got auto driving tech that should have some government contracts behind it. You've got all kinds of stuff coming out. And it's still the number one EV maker in the world. So NVIDIA, here's the thing. I want to buy some NVIDIA probably tonight before the market closes. It reports earnings tomorrow night. By and large, I actually own long-term shares in NVIDIA, and I hold over all the quarterly earning reports, and I pay a little bit of attention to those, but I'm not too worried because it's NVIDIA, right? It's the leader. I just have a good sense that this is going to gap up 10, 15% on earnings. Could be totally wrong. The last four quarters, the earnings were good, but on two times, the market didn't like it for whatever reason. So they sold off. That's a big risk in holding a short-term swing trade over earnings. But gosh, I should have bought. We were looking at this earlier today when it was around 142, 143, and here it is at 146. So we're already a little bit behind the curveball, but we'll see. We'll see. I don't know if I'll do it today. Maybe still have time to buy it tomorrow. This is a bullish chart. There's nothing bearish about this at all. You're going to have a little trouble getting up through 149 or so, but it's almost there. 3-bar reversal on the little soft pullback to the 21-period moving average after a breakout move. Just all good. Google's been under some pressure, not today, however, but the administration may force them to dump their Chrome product. Doubt that's going to happen, but that's the threat anyway, because of monopoly concerns. But really, Google has not been in a good place. It is in a downtrend. Yes, it's starting to look a little better. This recent strength out on the election, post-election, all pretty good. Stacked MAs, everything's rising except the LRC, and that's okay. It will eventually rise once these higher prints come off and the right edge starts to get stronger. But I just wouldn't buy it with those political headwinds. I'm not gonna buy Google until maybe after January 20th. Qualcomm down in the dumps, avoid it. AMD down in the dumps, avoid it. ARM, one of my favorite IPOs out last year. We were in this one a little while ago. It got the traction initially, then it was all downhill, and below the 221 cross, avoid it. I'm sorry to say, but don't buy it. Same thing for MU. We were in this one as well, looking at it as a recovery play. Got up here, looked really good, couldn't break out, broke support, and now we're below support. So, no-go zone. All right, just real quick look at some of the stocks on my greens list. We're in a few of these already. Nice bounce. I'm just going to do these quickly. Nice bounce out of the pink zone in an uptrend. That's really what you want to see there, that kind of strength on the recovery. NVDA, we saw. IoT, I like this one. Earnings looks like next week or a couple of weeks from now. Big green stick, bullish engulfing off the 50, out of the pink zone. This is a software play. Very good fundamentals, good growth. I like it. CAVA, bouncing out of the pink zone, 50-period moving average, right? The fastest growing restaurant chain in the world, with plans to grow from 300 restaurants to 1,000 over the next 10 years. Yeah, this is a buy. Big up on earnings, came crashing back down. You don't usually want to see that. You don't want to see that earnings gap get filled. But I suspect, because this is also kind of a Momo play, has a little bit of a cult aspect to it, bit of a meme stock, that maybe that was just some pump and dump stuff. But I like the recovery. This looks good for higher. We looked at OWL before. This is a biotech I like a lot, right? Big breakout a couple of weeks ago, soft pullback into the 21, midline of the LRC, and reversing back higher. We're long TTD off that reversal at the 50-period moving average. Bullish engulfing. SLG looks good. NRG energy play looks good. We're in 4 because it's consolidating after a big breakout within the range, and that's where we like to buy it. That's where I like to buy it, within the range. QFIN is a Chinese play in the asset management space, just about ready to break out. We're long this one. It's a real estate play. I like this one a lot too. Pull back to the rising 21 is a software play. CRM software play, we looked at that. KKR, we're long already. Utilities, finally getting a little bit of traction, kind of a boring play, but this looks pretty good. And this is one of the setups that I like to look for is, right, uptrend, 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 and then you get these little pullbacks or consolidations. There's one right there. This little inverted head and shoulders is also one. You buy close to the breakout and or on top of the neckline. So you can buy that green bar right there or add or get in the next day. You have to be a little quick with that one because it didn't last very long. But this one looks like it's a better setup. Probably going to coil up here into the pink zone for a few days and then break out. I don't know this play, but I like what it's doing at the 21 period. And this is another one in the, I think this is in the asset management space. I'm not sure. Anyway, nice looking breakout and pullback, hold of support, reversing higher. All right. I am going to stop recording just now. Give me a moment while I get that set up, and then I'll take a few chart requests. God bless everybody. Have a great rest of the afternoon. Don't go away. I'll be with you in just a moment. Bye for now.